Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream both on YouTube and also on Facebook. So if you can hear me loud and clear, please say a hi to me in the comments and also in the chat box. Today, no trading, so expect more people. Henry is saying there might be the reverse, no trading, so people are taking a break. By the way, today, it's a US holiday. It is Martin Luther King holiday. So the stock market is not open. Plus, it is the inauguration of Donald Trump as the president of the United States. Okay, all right. So it's a dual event today. One is the holiday. One is the Trump as the president. So give me a like, give me a share. Okay, I really appreciate that if you can share it out. Okay, so fast, right? So we are almost into the end of January already. So of course, the next week will be the Chinese New Year already. And so fast, 1 month has gone into 2025 already. Okay, I'm also still getting used to my girl going to P1. Okay, so let me take a look at the comments right now. Okay, so of course, I saw a few already commented like Dave, Henry, Mary, Pei Wen, Geraldine, Bernard, okay, and such lah. So by the way, okay, I think I mentioned, last week I did not do my Facebook live lah because I was actually away from that. I was inside JB, okay, doing some shopping and New Year goodie with my friends lah. So okay, so this week, okay, back to normal. But next week, okay, next week Monday, it is actually the eve of Chinese New Year. I'm thinking whether I want to do a Facebook live or not. But anyway, the US Angmo market is still open now. Okay, okay, so maybe I will still do that. But by the way, I think 2 weeks ago I mentioned. Okay, so last year I started to so-called, I feel a bit top heavy lah. I feel a bit heavy. So actually, went to do some dieting and such lah. So in fact, I lost about 5 kilo. So I think my face doesn't look so round right now. And ever since my girl is going to P1, right? She is in P1 right now. So typically she go to school. The school bus will come at 6:25. Okay, so typically 5:30 a.m. I'll wake up already. So after I send her to the school bus, then after that, okay, then I'll go for a run. So so far has been running about 3 times a week. So I think I mentioned before, okay, actually losing weight, it is quite simple, but it is not easy to execute. The concept is simple, same like, buy low, sell high. The concept is dead simple, but execution wise, it is quite difficult. So for me personally, okay, you just really, really need to eat lesser. For those who wanting to lose weight, okay, and this is outside of trading now, okay, I think 80 to 90% it is diet. So you must control your urge to keep eating, okay. As long as you can eat lesser, you will lose weight, but it is not easy to execute because you will feel hungry. There will be hungry pangs. Okay, so for the first 1 to 2 weeks, kind of struggle, but after that, kind of getting used to it already. So right now, I can even go just 1 meal a day. Okay, of course, you think, Alex, breakfast is the most important day of the day lah. I must eat lunch, I must eat dinner, I must eat breakfast. Then just go ahead. Okay, do whatever you think it is the best for you. So for me personally, I think the thing that really helped me to lose weight is to really eat lesser. Okay, really eat lesser. All right. So hello, Wylam Hadley. So it is Tommy. Okay. So it is the same as buy low, sell high. Okay. Easy to say, but difficult to execute. Okay. So of course, for those who just came, okay, today is the inauguration of the Trump. So of course, not only that, the crypto market, it is also very excited with a lot of news and so-called a lot of this so-called Trump coin also shot up higher. Okay, I think few thousand% that kind of thing. Okay, so a lot of things are happening right now. So I'll go through with them one by one. So before I go into that, okay, so let me just share my screen right now and just go into the things today. So let me just share my screen. Okay. Meme coin very, very boom. You mean very bullish, is it? Okay. Yeah, so to be really honest, I didn't really follow into the meme coin and all this crypto lah. Okay, I know. Okay, I'm not sure about you. How many of you actually profited handsomely from the recent crypto surge? Don't talk about Bitcoin, Ethereum lah. Those smaller cap companies, so-called meme coins like Trump. Okay, 一夜暴富 suddenly become very rich. Okay, I don't know how many of you actually raise up your hand, but if you are willing, okay, maybe you can share with some, you make some money from crypto and such, they'll be, keen to know, okay. But for me personally, okay, I am not so keen, okay. You can call me old-fashioned, okay, but again, I want to warn you that, it is getting a little bit, a little bit crazy, okay. Of course, high can go higher, but once again, I know at the end of the day, what will happen? It always repeat the same thing again and again and again, okay. Those who make a lot, suddenly you lose back everything to the market. Same like equities market, stock market. Okay, just go back to 2017, 2018, 2022, the crypto bull run, or even the equities bull run in 2020 and 2022. Okay, those who make a lot of money and in the end, cannot keep the money and lose back everything to it. So if you are making good money from crypto, good for you. But remember, okay, to take some profit off the table. Okay, when you want to take profit, okay, it is up to you. You decide, okay. But remember, okay, don't make your profit into losses. Okay, you need to keep your profits. Okay, don't let greed, okay, come you and you want to bet more and more and more. At the end of the day, you lose it back all. Okay, why? How I know? Because I used to be like this before. Okay, all right, and then okay, after so many so-called boom and bust, I already know what will happen eventually lah. Okay, so you just make the gain while it lasts, milk the market while it lasts. Okay, all right. So as usual, a disclaimer first, whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. I actually forget to bring my water in. I think after half of the time, I'll get very thirsty. Okay. Telegram channel. Okay. Do subscribe to our various social media channel over there. Telegram, YouTube, and Twitter, and TikTok. Hey, by the way, okay, how many of you actually attended the trading carnival that was held last week? Okay, if you came, okay, just type me in the comments. Henry, I know lah. Henry, I know you came, okay? So if you came, just type me in the comments. Or maybe you are new to MarketWise Asia, you just attended the trading carnival last week and somehow, okay, you continue to watch the Facebook Live today and you're new to my live stream. If you're new to my live stream, okay, just type number 1 in the comments, okay, so that I know. Okay, if you attended the trading carnival, just type me. If you are new to MarketWise Asia live stream, for example, me, myself, okay, just type number 1, okay. Do interact with me, okay, I really appreciate that, okay. Mel, okay, thank you so much for your reply. So do you attend the trading carnival? Okay, I think that was a pretty so-called nice insight from the speakers, right? Thanks Kim Ying and thanks Hadley. Okay, so Rainer, Beanie and Jay shared their so-called respective view of the market. Okay, more on Rainer and Jay. So they share the outlook for 2025. Okay, and of course, Rainer will share with you how he actually turn from a losing trader to a profitable trader and how to find your edge. So all in all, I hope that you enjoy this session because there is no selling, okay, in the event. Just trying to give you more value and content. So I hope you appreciate that. Okay, hopefully I think the next event will come in, I think in April or so, and I hope that you support the event as well. Okay, so let's go through the economic data for this week over there. So once again, today, as I mentioned already, okay, the main event will be the Donald Trump. So I think the inauguration will start at 12 p.m. Okay, in US timing. Okay, then he will speak. Okay, at 1 a.m. Singapore time. Okay, that's 12. I think that's 12 a.m. Okay, yep. So 12 p.m. US timing. So President Trump will speak. So other than that, okay, today is a US holiday. The market is not open. So the other major news that this coming week, okay, it is going to be Thursday, unemployment claim, and then on Friday, the PMI. So you can see that this President Trump speaks, right? It is a red color. So there will be some high impact. So depending on what he said, okay, and I'm not sure whether you know, okay, after he becomes the president, I think he's going to announce, I think more than 100 plus of executive, legislation and such executive orders, okay. So if you actually search for EXEC executive order Trump, okay, yeah, all right, so can go to whatever that comes out, right? Okay, you can see, for example, the CNN one, okay. So there are quite a number of things that he's going to so-called to to order, okay, what's going to happen, okay. So you can see that, some of the things that, energy, he want to relax, okay, and relax on the fossil fuel and such. There's a lot of things, the immigration, Mexico and all things. So you can Google and see what he says and what he want to do. But of course, how you impact the market, okay, as of now, hard to say, but there will be a knee-jerk reaction, okay. Of course, right now you can see that the crypto market is already very bullish because Trump is actually pro crypto. Okay, of course, he launched his Trump coin that surged, I don't know how many percent in just a few hours, that kind of thing. So the Trump coin, okay, it is actually TRUMP. Okay, this one is the USDT. Not this one. Okay, I don't know which one, but there is a few, okay, in the market. This one, yep. You can see that initially it was actually less than $10. Okay, right now at the peak was about $80. Okay, this is about 8 times. Okay, 800%. 800% more. Okay, so yeah, so this is for the official Trump. Okay, so by the way, right now we have more than 125 people. How many of you actually hold Trump coin? If you hold Trump coin, just type letter T in the comments. I'll be interested to know. So how many percent you actually made? Okay, anyway, I just asking. Okay, if you don't wish to share, that is fine as well. Okay. Oh, so you hold Trump and the millennial, is it? You are just telling me, or that you actually hold Trump and this millennial coin also? Chris, Chris is also a seasonal Vantage Insiders, okay. Oh, so Tommy, you held that. So you must be very rich right now, is it? Okay, all right. So as I mentioned, okay, do remember to take some profit off the table. Okay, I don't think it will last long. Okay, all right. So of course, don't talk about all the crypto and all this stuff. Let's head back into the traditional, equities market and the bonds market. Okay, of course, I'm not sure whether you has noticed. Okay, the so-called the yield starting to go higher in recent months. Okay, so in fact the rates are starting to pressure the stock valuation again. So for now, I'm going to go through some of the macro view what's happening right now. Okay, before I go into the standard chart analysis, and the TA and such. Okay, so just a macro view. Okay, so in case you don't know, if you take a look at the 10-year EU, 10-year yield, this is on trading view, is actually the US 10Y, US 10Y. Okay, since September at the low of about 3.6%, it steadily went up. Okay, went up to about 4 point. At the high was about 4.8%. At about 4.8%. Okay. Of course, when the interest rate, or the yield goes higher, it is going to affect the stock market as well. So as I mentioned, it's going to start to pressure the stock valuation. So the reason why it is because, okay, higher interest rate, okay, will increase the borrowing cost. That company will face higher expenses, which can reduce the profits and also the growth potential. Okay, of course, in the event that really, okay, the market is forward looking and the Fed actually, increase the interest rate again next time, okay, that will reduce the attractiveness of the stock market, okay, because as interest rate rises, those are fixed incomes, bonds and all these offer a better return. So those are basically risk free. So why put yourself into something that's very risky in equities, in stock? Why not just put it in just the bonds market and such, okay? right? So this will affect the stocks valuation as well. And of course, there's this valuation adjustment, okay, because rising interest rate, okay, will decrease the present value of the futures earnings, and this will so-called cause a sell-off, okay, especially in those small cap stocks or even a growth stocks. They are very sensitive, okay, to the interest rate, okay. So in case you don't know, okay, in case you don't know, so this the 10-year EU, okay, all right. So the 10-year there was a spike, okay. So not say really a spike, okay. To me, I feel that it is more of a gradually heading higher, okay. Of course, in recent 1 or 2 months, it goes quite fast, okay, go higher. So in fact, okay, last year, just like I mentioned, right, the 10-year yield hit a 14-month high of 4.8%, okay, 4.8% before retreating after the positive inflation data, okay. So 4.8%. So in fact, for last week, okay, thanks to the so-called positive so-called outcome of the CPI inflation data. So in case you don't know, so you can actually go back to last week. Last week was actually the 12th of January, right? So you can see that last week, okay. So you can see that the headline CPI, of course, a bit higher, expected. Previous was 2.7, but the forecast is 2.9%. So as forecasted, okay. But you can see that the PPI month-on-month and these are core CPI. In fact, it actually reduced, it dropped a little bit. So forecast was 0.4, but the actual was only 0.2%. Okay, and the core CPI forecast was 0.3%, but the actual was only 0.2%. So in a way, it is better than expected. So in a way that, you know, at least based on what the data it is telling us last month, okay, inflation is still under control, and this lead to the so-called the bonds yield, you know, so-called drop a little bit, okay, not so pressurized on that, okay. All right. So in case you don't know, okay, somehow it seems that, you know, as long as the yield exceed 4.5%, so 4.5, it will pressure the stock equities, okay. You can see from here, like 3 times since 2022. This is the 3rd time. So previously was in summer, between June to September 2023, it triggered a 10% drop in the S&P 500, okay, and then in April 2024, okay. So you can see that this is the threshold of 4 points. Somehow, like if you hit at about 4.5%, okay, it will cause some effect on the S&P 500. So you can see that initially it was in this summer in 2023, hit about a high of 4.9%, okay, over there, and then over here, and this is the 3rd time. So if I add in the S&P 500, okay, you can see that, you know, I just zoom in a little bit, stretch out a little bit over here, okay. So you can see here, okay. So as the EU was rising, okay, then the S&P actually had this one in 2023 caused about a 10% drop in the equities, okay. And then, you know, and then in 2024, okay, and also caused about 5% drop in the equities. So right now also hitting the 4.5% as it goes higher, 4.8%. So you can see that the equities actually had a drop since the start of the year. Okay, so the year started quite choppy, up, down, up, down, up, down. Okay, it's only like last week, okay, late last week, then the market started to rebound, that kind of thing. Okay, everything clear so far? If everything clear so far, okay, just type letter Y to tell me yes in the comments. So just have some response, hopefully to see some response from you. And if you could, if you're just watching right now, please give me a like, share, and comments. I only see very few likes on the Facebook. So give me a like, share, and comments. Okay, really appreciate that. Okay, it really helped to spread this Facebook Live to other people as well. Okay, if you're watching this on YouTube, okay, do subscribe to our YouTube channel as well. All it takes is just less than 2 seconds, okay, and you are done. So as I mentioned, right, typically as the yield rises, it will cause a pressure on the equities market. Okay, So this is the chart that I am going to show you over there. I uploaded this online. So let me try to expand this. Okay, it is essentially the same what I show you on the trading view chart. So you can see over there, it approaches the 4.8, 4.9%. Then the equities had a sell-off, hitting the 4.5, 4.8. Okay, again, the equities had a sell-off. Once again, 4.5%, the equities also had a sell-off. Okay, so 10-year yield at 4.5% has been a headwind for stocks. I mentioned the CPI a bit cool down a little bit. Okay, so that caused the pressure on the stock market. Okay, rebounded a little bit. Okay, all right. So this is that. Let me move that. So what is actually behind the rise of the so-called the yield? Well, so as I mentioned, right, the market is always forward-looking. So the market is anticipating that there could be some inflation forward, and there's a possibility, okay, that the Fed, okay, might actually increase the rates further or reduce the cut. Okay, so of course, I think in December they forecast that in 2025 there's going to be only 2 rate cuts. Okay, the market, it is also pricing in that they might be only even doing 1 cut also. So that caused the yield to go higher. Okay, so the yield up. Okay, long-term yield rose 1% since mid-September, and this is based on the 20+ years treasury bonds. Okay, and about 1/3 is being tied, as I mentioned, to the inflation expectation. And not only that, okay, in recent, I'm not sure whether you have been realizing it. Okay, the oil, okay, has also been going higher. Okay, oil is up 20% recently. Okay, even though the core inflation progress slowed down. So typically when the commodities starts to go higher, okay, there's some lead time. Okay, after that the so-called inflation tends to go higher as well. That was what happened. Okay, in 2021, 2022. Okay, we can see that all the commodity prices, starting to go higher, and eventually, okay, the inflation data will reflect, okay, into the economy as well. So of course, in the oil, let me try to just do a naked chart. Okay, so for the oil, you can see that of course today came down lah, but you can see that ever since that it bottomed at about 65 or so at the swing low. Now it is more than about $80 plus already. So from the trough, okay, to the high, okay, it's up about 22%. Of course, in recent day, it's starting to drop a bit lower. So for those, okay, who has been a seasonal vantage insiders, SVI, okay, this rise should not be a surprise to you, okay, because I know there are some so-called members who traded the oil as well. Personally, me also. So I have already, so-called give a roadmap, okay, to my members, saying that, hey, typically at the start of the year, oil, okay, commodities like gold, silver, they tend to surge higher based on seasonal trend, at least for the past 10 years. And this is happening this year as well. So personally, okay, I also caught this, not exactly the full run because I'm more of a swing trade. Okay, hit my target, I run. Okay, hit the target, I run. So you can see over here from the seasonal vantage, the member success over there. So for me personally, I actually entered into the is it the oil? This one it is. Did I put it in? Yep, oil, the USO. This is the oil ETF. So for example, Melvin also has it the oil as well. Okay, all right. Okay, so this is oil, and in fact, I think I'm a bit ahead of myself. Gold, I also say the same thing. Typically at the start of the year, gold tends to go higher. So for me personally, I also have a position in gold as well. So again, okay, I think there are still a few people who ask me about the so-called the roadmap for 2025 for the seasonal vantage insiders. Okay, so in case you wanted to see this, okay, so this is the, all right, you can just search for SVI Connect, right? Okay, I first mentioned this during the SVI Connect night where I share with you the so-called the market outlook for 2025, right? So this is the one, okay? Download the SVI Connect night presentation slide, okay? This is the one. You can download the PDF. So I'll share with you. I have shared with you all the asset classes, the roadmap for 2025. Okay, so far quite accurate. So do so-called put a focus on that. Of course, it doesn't mean that it's going to be 100% accurate dot to dot lah, but at least it can give you some warning anticipation of what could happen. Okay, all right. For those SVI, can you just type OK in the comments for those SVI members? Okay, in case you don't know. Okay, all right. Can. So yeah, so not only that, the inflation, as I mentioned, right, okay, that is causing some, expectation that the inflation can go higher. So not only that, okay, the US economy, okay, the strong growth is driven by jobs, spending, and sentiment, etc. Okay, while I'm saying okay, just now I shared with you already, now you should know already. Okay, all right. So policy risk, of course, Trump inauguration. Okay, so this year, okay, Trump, okay, the tariff and such, but this is what the market is worrying. But for me personally, okay, I think don't need to worry so much about the tariff lah. Okay, I think I mentioned previously before. Okay, tariff and all this, it is just temporal. Okay, it's not going to be a long-term thing. Okay, so yeah, but anyway, this is what the market is trying to tell that there are several key pointers that the market is worried about. Okay, all right. So as such, right, okay, with the strong growth, okay, and like the oil, all this commodity is going higher, and then the inflation data and all this, right, it is cooling down, but not exactly at the rate that the Fed wants. So all in all, okay, there's no urgency for rate cut. Okay, expectation reduced. That's causing the yield to go higher previously, because there could be anticipation that it can go the Fed either cut the interest rate, as in not cut, as in stop it. Okay, as in they don't want to cut it. Okay, instead of 2 cut, only 1 cut and such, or might be even go higher. All right. So as I mentioned, right, this CPI is the inflation and blah blah blah. Okay, so I don't go too much into that lah. So basically, I think I prepared a chart. Okay, I might as well just show you the chart lah. Yeah, pause. Pause is the word. Okay, the Fed will pause the interest rate. Okay, cut the interest rate. Okay, so open image. So this is basically the core and the shelter inflation. All is coming down lah, but again, not as low as what the Fed wanted. So still holding well. Don't want to cut so fast. Okay, the Fed. All right. So yeah. So but the key thing is, okay, if it stay status quo, okay, if the Fed is not going to hike anymore, okay, but also not going to reduce. So it's basically status quo lah. But I think as of now, the Fed is not hinting of any rate hike, okay, even though the market is anticipating. But okay, if there is no rate hike, okay, which link? This image, this one? Is it this link? Okay. All right, post shared it. So if there's no rate hike, okay, the yield may not move sustainably higher, because I think, okay, this yield, this 10-year yield, okay, I think it is overdone. It is overdone. Okay, it is overdone. Right now, the Fed fund rate, okay, see bit.ly target rate. This is the CME Fed Watch tool. So you can see that right now the current rate, it is only at about 4.25450 already. So it now to go to about 4.8, it is a little bit overdone. And of course, eventually, okay, hopefully, okay, the interest rate will come down. So this is not going to be moving sustainably higher. And historically, okay, the bond price, okay, the bond yield, okay, peak at around I think February or so. So peak around the end of February. Okay, so this is yeah, as I mentioned, the bond self might have overshot. Okay, so once again, this chart that I found. Okay, so as long as the Fed, okay, status quo is not going to hike higher, then eventually, okay, the yield will come down now. All right, so this is what he's trying to say over there. So with that, okay, the reason why I say all these got reason one. There's a reason one. Okay, so which means that okay, if okay, the yield it is going to come down lower. Okay, what will happen to the bond price? Okay, if the yield is going to come down, okay, what will happen to the bond price? So remember, okay, the interest rate, the bonds yield has an inverse relationship, okay, with the bond price, right? So if the yield is going to go down, okay, then the bond price, like for example, the ZB, the 30 plus years treasury bonds and such, right, okay, it is going to go higher. You can see that it is quite overdone as well. Of course, low can go lower. So indeed, it went a lot lower and such, okay. But the good news is, later I'll share with you some seasonal data that might be some of interest to you and some opportunity for you to take a look now, okay. So of course, all in all, recently the market has been coming down also, right? Okay, so people sound a bit scared and such, okay. But okay, I want to reiterate that overall, okay, I think the market, it is still, economy is still okay, everything is still okay. Okay, even the corporate profit, it is still the key. Okay, all right. And of course, the bank sectors, okay, has kicked off the Q4 earnings as well. So far, it is still doing quite okay. Okay, corporate profits, it is also okay. All right, the earnings, I think I mentioned previously, I think a few Facebook Live ago, it is doing okay, expected to rise 11% year on year. So once again, okay, I'll share this. Yeah, Henry said TLT up, yes. Okay, so this is the chart. Same data lah, but different format. Okay, so previously I mentioned already. So this is okay, the earnings. So the S&P earning growth is expected to accelerate for the second year. So 2024, okay, was about 8-9% earning growth. This year they're anticipating about 15% earning growth. So if the earnings is going to go higher, so like the P ratio is go down lower. So the P ratio goes down lower means that that the market has still more room to go higher. So what do I mean by that? So MUL multiple, this one, okay, the S&P P ratio. Okay, right now, okay, it is at a not exactly at a very high level. The P ratio for S&P, it is 30. Okay, it is high, but not extremely high, like for example in 2020 COVID, like about about 35, or even 2200, 9208, okay, like 40 plus, that kind of thing. Okay, I don't know what's the number, okay. All right, but if earnings go higher and like price remain constant and such, and then the valuation, okay, the market still has room to go higher, okay. All right, so at least that will can push the valuation higher if the earnings continue to maintain or even be better. Okay, all right. So yeah, so these are some of the macro things that I want to share with you. So exactly what is happening in the market, the bonds, okay, the earnings, even that recently the banks kick off the earnings, right? So this is, I think I saw the news. So in fact, most of the financial stocks has been beating the expectation. Okay, earnings bigs as banks continue to win big. Okay, so you can see over there the XLF, the financial sector. Okay, for the past 1, 2, 3, 4, 5 past 5 days, it has been surging higher as well. So it's a good start. Okay, so it means that the economy, okay, everything is still doing okay. Banks are quite crucial, okay, for the stock market as well. So far, since for the past 1 week, up about 7% or such. Okay, so it's still doing quite okay. All right. Any questions so far? Any questions so far? Any questions so far? Okay. If any question, okay, you can just type in the comments. So let's take a look at the S&P 500 right now. Okay. So, okay, if you take a look at the S&P cash index, once again, I just go back to the zero gamma level from spot gamma. Okay, so this is the link in case you are new to MarketWise Asia. Basically, this is going to tell you what is the gamma exposure by the options dealer, whether they are net gamma or positive gamma or net negative gamma. Okay, so if you don't understand, not important. The key thing is whether it is above this level at about 6,000 level, at about 6,000 now. Okay, it is at about 5,008. Yeah, at about 6,000 level right now. So I shifted higher. Okay, 6,000 level. That is the zero gamma level. Okay, if price can continue to stay above 6,000, okay, we can expect more upside to go. If price stay below, then there could be more volatility. Okay, and so far it's looking quite okay. And if you add in the usual indicator that I use, the cloud and CPR, you can see that previously, okay, I was a little bit bearish last week. Okay, price dropped below the CPR and below the cloud and such, but immediately it kind of reversed back up again. So it is telling me that price doesn't want to stay below, okay, the CPR and the cloud for a long time. It wants to still be an uptrend. Okay, it is still in an uptrend. Okay, all right. So if you take a look at the S&P futures, okay, basically it's the same thing. Okay, this is the futures market. After that, it kind of dropped below the CPR and immediately reversed back up again. Nasdaq, okay, it is the same. Okay, all right. I was expecting some resistance level at the CPR, but it did not continue to go higher. The price action was actually really quite bullish. Okay, so after it drop, okay, then go up again. The Russell 2000, the weakest among the few key indices, once again, that was a forced bear flag pattern and then reversed up again. Okay, so all in all, based on price action, okay, still okay. At the CPR level, above CPR, above the pivot point, all in all, it is still in an uptrend. All right, and if you add into the DP gallery over there, okay, maybe I should go to another side. Okay, so you can see that the market breadth, which I also shared with my SUI members, right? So initially it was at a low level, okay, but you can see that within just 1 week of time, okay, the market breadth for percentage of stocks above the 20-day EMA, 50-day EMA, it surged higher. So right now, about 71% of the S&P stocks is above the 20 EMA, about 53% above the 50 days EMA. So previously, I mentioned I was a little bit skeptical, where price, dropped below the 50 percentage mark for the stocks above the 200-day. But after that, it dropped below 50, immediately it reversed back up again to about 60. So all in all, the market, the trend, it is still okay. Okay, so until it hit about 80 plus percent, okay, or hit the 80 plus percent for the market breadth for the 20 and 50-day EMA, then I think that we need to be cautious. So right now, I think, okay, the market might have still some room to go higher, okay? But we are, I think, almost there, okay, for at least for the 20-day EMA, okay? 50-day EMA, still some room to go. So which means that, okay, from until now, okay, at least what I tell my seasonal foundation insiders to about early February, okay, I think there's still this window of opportunity, okay, to go long. And when the time comes in February, okay, then you need to be a little bit more careful, okay, you need more careful. Okay, all right, clear so far. So will the upside of the US market still be driven by Magnificent Seven and the technology sector, or it will be broadening? Okay, in fact, I think last week, or not last week I didn't do a Facebook Live. I think 2 weeks ago, I forget already, I shared that, in fact, the market, it is broadening, not just the Magnificent Seven that is gaining leadership. In fact, a lot of this mid-cap, small cap is also outperforming the S&P 500. So all in all, the market, it is doing okay. Okay, not just the top mega cap stock that is performing well. All right. And not only that, right? Okay, I talk about the market breadth on the percentage of stocks above the MA. and this one McClellan, so starting to go higher also, and then this sentiment chart, okay, sentiment chart, okay. I think about 2 years ago, I did a post-summit booster seminar, face-to-face one. I'm not sure how many of you actually remember. I promised to do one for my SEI members again for the masterclass video. So you can see that, typically when the sentiment it is at a low, especially, okay, when the bearish sentiment actually hit about 40% mark, okay, all right, a lot of time it tends to mark a turning point. It tends to mark a turning point. So over there, I can see that, somewhere around this 40%. I'm not sure they can see, okay. I won't drill down very deep, but you get the idea, okay, you get the idea over there, okay, 40% mark, about 40% mark, okay, all these are marking as a turning point. Turning point here, it goes higher, 40% here, it marks a turning point, okay, 40% here, it marks a turning point, okay. And typically when it dropped below the 50% mark, which means that more than 50% of these AAII investors are bearish, then typically it will mark a low already, okay. It's just a matter of time. So for example, over there, okay, 50% mark, okay, a lot of people are bearish, okay. This is marking at a low, okay. This 50% mark, okay, it marks a low over there. Okay, so what is this AAII? This AAII, okay, basically it is this investor sentiment. So this is a non-profit organization with 150K members, okay. A lot of them are retail investors as well, and as you know, most of the people always get it wrong at the wrong time, okay. They enter at the wrong time, okay. The sentiment is always wrong at the wrong time. Typically when a lot of people are very bearish about the market, it typically marks a turning point. So 40% mark, it is like a good mark also. 40 is one mark, 50% is also one marking. So if the market is going to stop the correction, okay, the correction is over, 40% tends to be a turning point as well. Okay, if the market is really, really bearish at 50%, it is also a turning point. Okay, so can you just comment, okay, to make sure that you understand? 40, 50, 40, 50, okay? Just type 4050, okay, your 4D number, 4050. That often marks as a turning point. So it seems that right now, okay, even though the market did not really drop a lot, okay, but the market sentiment, it is pretty bearish, okay? So that could be a turning point. So again, how high the market can go eventually within the next few weeks or so, nobody knows. But I think that could be marked as a swing low for now. Okay, so like I think Henry said, the RSP, this equal S&P, it is also going higher. This mark has a low right now. Okay, mark has a low right now. Okay, so for those who want to know about this investor sentiment who are new to MarketWise Asia, all right, so this one is always I go to, okay, not a secret, but I can share with you. Okay, this is from the DP gallery from stockcharts.com. Okay, so all in all, okay, I'm just trying to say that, for now, okay, at least I think until the start of February, early February, I think the market can continue to go higher. But when February comes, okay, when February comes, I think you need to be a little bit careful, more careful, little bit more careful, okay. All right. So can China 2025 bull or bear run? Okay, the honest answer is I don't know. Okay, but okay, based on the Hang Seng roadmap that I share with you, okay, with the seasonal funded insiders, okay, I think okay for now until early Feb or so, okay, still pretty okay, But all in all, okay, I don't really trade the Chinese market, so I cannot give you a definite answer. Okay, But if you're talking about short-term trading, position trading, I think the Hong Kong market, it is still okay lah, okay? And of course, like Henry said, Chinese New Year bull, typically Chinese New Year, okay, the Chinese market tends to be bullish as well, okay? All right, yeah, that's true, okay? All right, so you can see for the Hang Seng, recent days, it is actually not too bad, okay? And of course, like what Tommy say, you know, a lot of things depending on the CCP, okay? How are they willing to support the market also? Recently, not too bad, almost like the US market, okay? All right, it just go higher and such. All right, so yeah. So just now I mentioned, right, the EU, okay? When the yield starts to come down, okay, the bond price will start to go up, okay? And right now we are in the almost in the midst of this favorable period over there. In case, okay, I just recap over there. All this I said in December, gold, silver, okay? Let's just talk about gold, okay? Because I entered in gold. So gold is doing not too bad, okay? Since December, of course, there's a sell down, but eventually it go higher, okay? So I'm still holding on to gold, okay? And then last week, okay, last week I talked about yen. How many actually did on the, not last week, 2 weeks ago, I talked about the yen. Because last week I did not do my Facebook Live, okay? I said that yen typically during this period, it is a favorable period to go higher, which means that if yen is going to go higher, which means that the USD, JPY, the dollar yen, okay, is going to come down. Because if dollar is going to come down, the yen is going to go higher, which is like this right now. So personally, okay, I also shared with my members over there, okay, I actually exited this shorted the dollar yen, shorted at about 156 to take profit at about 157.7. So in case you don't know, this is the dollar. How many caught this? All right. You can just share me on the yen. Okay. All right. So it is a short swing trade. Okay. I was waiting for the opportunity. Okay. After that, go grinding a little bit higher. I think there's about time already. So I shorted that at somewhere near the top. Okay. And then hit the CPR level. Okay. I exited the somewhere near the low as well. Okay. Not exactly at the low, but midpoint there. Okay. So it was a good swing trade for me personally. So this is what I shared previously. Platinum, okay. I think platinum wise, not so much. Okay. Let me see platinum. Okay. Platinum, I got stop out previously. So platinum, where is it? Okay. Platinum, okay. So it's a bit choppy. So after that, go down lower, then go up higher, and then come down again. Not that easy to trade, okay. So choppy for platinum, I got stop out. Okay, this is okay, normal, okay. I cannot win every single trade. Okay, so gold also profitable as well previously. Okay, so right now, okay, this is for January 1. Okay, so this is for January. Okay, so again, this is based on the futures market on the bonds, okay, treasury bonds, 30 plus years treasury bonds market. Okay, so from the 22nd of January, okay, to about 4th of February, okay, for the past 11 years, okay, 91% of the time it went higher during this period. Okay, this is for treasury bonds. So if you take a look at ZB, okay, so we are somewhere around the midst of here, okay, until the February. I think there's some bullish window period. Okay, I haven't decided whether I want to trade or not, but I don't have a position as of now. In fact, I told my SDI member that most likely I won't be trading right now because for the past few days it went higher already. So there's no trigger for now. So the closest proxy will be TLT. TLT, this is the 20 plus years treasury bonds ETF over there. Okay, so we are also in the midst of this favorable period over here. So there's potential that the bond price can continue to go higher, which means that the 10-year yields, okay, will come down. Clear so far or not? Okay. All right, if you understood on these bonds, okay, favorable period, okay, just type letter B in the comments. Letter B in the comments. Okay. All right. Can before I continue, just want to see some B's in the comments. So if you enjoy my sharing so far right now, there's more than 150 people combining from YouTube and Facebook as well. Please give me some support, like my Facebook live, okay, also like the YouTube live as well. If you're watching this on YouTube, please subscribe to our YouTube channel. It just takes you about 2 seconds. Just click subscribe and you are done. What's the ETF again? TLT. TLT is the 20 plus years treasury bonds. This is the TLT as a proxy. Okay. This is also a very commonly traded bonds ETF. This is a TLT. TLT. Okay. What is your opinion for Bitcoin for 2025? Okay. Typically, start of the year, bullish. Okay, I won't say too much because I think this is only meant for my seasonal advantage insight. Once again, the SVI, you can head back to the roadmap. It is all there. Okay, I think early start of the year, Ethereum, Bitcoin, typically bullish. Okay, but like I mentioned, okay, previously, okay, my target was about 120. Okay, again, this is based on the weekly and the monthly time frame, okay, because of this flat pattern leg up. So if price really can go to about 120K, once again, you need to be a little bit careful, okay? When you have profit, you need to take. Again, if you are those crypto native, you think that crypto, Bitcoin, Ethereum is the best things invention since sliced bread, okay? You think that can go to 500K, 1 mil, long-term one, you are very bullish, then go ahead and hold on to it. I'm talking about trading perspective. Trading means you will buy, you will sell, you will buy, you will sell. Not hold on forever. If you're holding on forever, I repeat, okay, you can continue to hold. I have no idea, how high Bitcoin, Ethereum will go. But if you are into swing trade, position trading, you want to take profit that high, okay, once price reach about 120K, okay, you need to be a little bit more careful. So this is the ABC leg up. Okay, previously I have already exited just slightly below 100K. Okay, so no regrets because that was a good profit for me as well. Okay, and again, I want you to emphasize, recently you can see that the craze is starting to get a little bit crazy also. Not at the peak, 不是猪啊 not PIG okay, it is peak, not at the peak bullish sentiment, but we are getting a little bit more crazy already. People are getting a little bit more FOMO. So you need to be a little bit more careful. When people start to get FOMO, moon this, moon that, then you have profit, you need to take profit. Okay? You don't be the last one to stay in the game and then everybody crashes out, then you lose the money. Okay, so I think I need to warn you this. Be a little more careful. Not at the peak yet, but I think starting to go higher already. All right. So be a little bit more careful. Especially you can see all the meme coins starting to get crazy again. This is when you need to be a little bit more prudent. Okay, more careful, and just don't always think that, oh, I just want to get 10 times return, 100 times return. Then at the end of the day, history will repeat again and again and again and again. It always repeat. Okay, most of the people will lose eventually. Clear so far? Can? All right. So, okay, one more thing before I go, one more trade ideas. This one is a little bit, okay, further away. The one that I'm going to share with you is actually copper. Okay, copper. Okay, so for those SEI, I did not share this, so you want to take note of this as well. This is on the copper futures. Okay, from 31st of January, okay, to 21st of February, okay, for the past 11 years, okay, 91% of time, okay, it went higher, which means that out of the past 11 years, 10 years, it goes higher during this period. So this is the base metal, industrial metal, not the precious metal. So let's take a look at the copper futures right now. Copper futures is HG, okay? Based on a daily time frame, today it is coming down. So you can see that, copper has been coming down, recent months, okay? And for the past 3 months or so, okay? For the past 3 months or so, price, it is below the CPR, And right now, 2025, this is the first time, okay, it has broken above the CPR level. So does that mean that it has gone into an uptrend? Okay, not yet, okay? But potentially, trend might be changing into an uptrend, especially if both the price, it is above the CPR and also above the cloud, okay? But you can see that, 31st of Feb, the 31st of January, okay, somewhere around here lah, somewhere around here, okay? So you can see right now, for the price of copper, it is coming down, okay, coming down. So, the best scenario is that, right now goes up, then there's some more pullback, then somewhere around here, then wait for a trigger to go higher. That is the best scenario. But again, it does not mean that it's going to happen like this again and again, okay? But this is what the data is telling us, okay? A lot of time it tends to repeat again and again, but not 100%, okay? So you still need to watch the price action for copper. Okay, so Henry is asking, what's the copper proxy? The proxy, okay, either you can trade CFD directly, or you want to trade, you can trade the CPER. This is the copper ETF over there, the proxy for copper. You can see that recently has been quite bullish. So right now, once again, as a proxy, it has been undergoing some pullback as well. Okay, we can see that it is above the cloud already for the copper ETF. Okay, this is for copper. Another proxy will be copper minus COPX. Okay, global X copper minus. This is weaker. Okay, it's so-called relatively weaker, lagging compared to the copper metal itself. But it is trying to struggle to hold above the CPR. Okay, but to keep things simple, the proxy will be, the ETF will be CPER. Quite simple to remember lah, copper lah. Basically, it's copper ticker symbol. Clear so far? All right. Any questions so far? Just nice. 1 hour today also. Just nice. Okay. All right. 1 hour. So if you enjoy my sharing session today, okay, yeah, I would really appreciate if you can just give me a like, share, and comments. Like my Facebook page and also like this Facebook Live. Watching this on YouTube, okay. Give me a so-called thumbs up, okay, like it, and also subscribe to our YouTube channel. Any questions so far? Okay, give you some 10 seconds to ask me some question. All right. So next week, most likely, I will have my Facebook Live lah. Okay, I think just before the Chinese New Year, because the Amor side, they are still trading lah. They don't celebrate Chinese New Year lah. Okay. All right. So if you enjoy my sharing today, you find something interesting, you like the trade ideas, you like what I'm sharing about today in the macro views about the bonds and such, right? Type value in the comments, type value or type letter V in the comments. So I really appreciate that you enjoy my sharing session today. Okay. All right. So with that, thanks so much for staying with me until the end of today. Right now it's about 11:30 p.m. Okay. Yeah, so I think I might need to go to sleep pretty soon. I need to wake up at 5:30. Okay, so with that, thank you so much. Okay, if you enjoy my sharing today, type V or type value in the comment section. Okay, really appreciate that. And with that, good night, 晚安, and bye-bye.